Jesse, what just happened? It was happening and suddenly now it's not.
Yeah. So it seems like there was a deal between two of the largest exchanges, Binance, to acquire what might remain of FTX, which from the outside looks like mostly a pretty big crater. And I think they took a look at it and just decided this was a hole too big to fill, with too much kind of radioactive regulatory scrutiny around it, which looks like it might have been a pretty big headache to deal with. So unfortunately, right now it looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately. And for some like the clients of Voyager, you might be aware that FTX was just appointed the sort of trustee to manage the Voyager payout process, who acquired those accounts. So it's history repeating itself here with crypto. I mean, we saw a similar situation with Mt. Gox back in 2014, when another trustee had deposited funds from Bitcoinica into Mt. Gox, which subsequently got hacked, and clients got a double penalty there, still waiting 10 years later to be paid out. So hopefully it doesn't take that long here. But yeah, unfortunately, another black eye on the industry, and it's going to be really tough times for the consumers and the clients of that exchange.
I asked Coinbase CEO Brian Armstrong the same thing I'm going to ask you. Would Kraken be interested in buying FTX?
Yeah, I'm sure they have some assets that are interesting, that have some value. We've already got quite a bit of the same infrastructure. There's a lot of redundancy between exchanges. So, maybe we're talking about user accounts. Maybe they have some subsidiaries that do specific things we'd be interested in, or possibly some licenses. But I don't think there's going to be value there, anything close to what the whole seems to be. So, I think the process is likely going to go into bankruptcy. There's going to be an organized maybe auction for these assets. At this point, I'm not sure whether they even would be allowed to sell these assets, which might belong to the creditors at this point.
Has FTX approached Kraken at all?
Yes, sir. We have spoken to them about this, and we're in the loop, and we're looking to get more information at this point.
Okay. Does Kraken, do you have any exposure to FTX or Alameda, and if so, how much?
No, we don't. We steered clear of the FTT token. We haven't lent them any money. We don't trade FTT on the spot exchange or the futures exchange. So we're in the clear on this one, fortunately. We're a very conservative business in terms of our operations. We don't operate a hedge fund on the side. There are no, strange relationships like that. We're not trading with clients' funds. We're not lending out clients' funds, and they don't know about it. We're a relatively conservative business. We've been around for 11 plus years. I think people should really look at this space, when they're looking at a new venue to trade at, look at that history, look at whether they've done something like proof of reserves, which Kraken has done twice in the last year. Look at their longevity in the space. I think the bear market is really the tide going out, and you see who's swimming naked when that happens. And some of these newer venues, they're seeing their first bear market for the first time, and they're getting called out, and it's become very apparent who's swimming naked.
So who is swimming naked? Are crypto funds next? Hedge funds, for example?
There's a lot of leverage out there. I don't think we've seen the end of it. I think there could still be some other quote unquote liquidity crises to come. I think that's a euphemism for sort of an insolvency. I think that people are marking some of these really illiquid assets like FTT, for example, which are highly centrally owned and controlled. They're marking at them 100% value, when the reality is maybe they should be marked at 10, 20% of the value, because the market is so thin. You couldn't sell all that if you had to. It's heavily centralized in the control. So there's an extreme risk here, and what we saw in this case with Binance and FTX was that Binance, a competitor of FTX, owned a huge supply of this token that FTX was using as collateral to borrow against. And when that asset started declining in value, I'm sure they started getting margin calls, and it turns out that they just didn't have the money, I think, to make good on those loans.